Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since the break above the key level of 65.45, the Australian dollar was mixed for the first trading day of the month. Meanwhile, the US dollar index remains weak as it sits around a 3.5-year low at 96.34. No doubt the bulls are keeping a very close eye in case we get the next move up, which is seen at 66 to around 66.65 as a potential target. Given the recent economic data, stronger private spending may support the Australian dollar and keep rates steady at the July 8th RBA meeting. Nevertheless, a weaker retail sales could pressure the Australian dollar and prompt a potential rate cut, which is how I view of 25 basis points. Trading volumes may be somewhat thinner into this week due to the shortened US trading week for July 4th, Independence Day. But still keep an eye on Friday. The non-farm payrolls report is expected to increase forex volatility, with the June jobs forecasted to rise around 120,000, down from 139,000 in May, and the unemployment steady at 4.2%. So turning to the technicals, this key level here that we see in the RSI once again has prevented the rally, and now we've got a hanging man in play here, so we do need to keep an eye on the watch as a potential pullback may find support, I feel, from around 65.30 or where the break level was, and see demand come back into play, and then eventually see the rally on, as I mentioned, above 66 cents. Turning to the euro, the market is still somewhat elevated as the bull run now hits the 8th consecutive day, reaching a new 2025 high above 118 as it now sits there. As I mentioned, the dollar index is still sitting around 96.34 and weak. However, traders have remained cautious after President Trump's renewed criticism of the Fed Chair Powell's calling for rates to be cut by 1% or lower. Jerome Powell has blamed Trump tariffs for delaying the interest rate cuts that the president wants. However, Trump criticized Powell, saying he's costing us a fortune by keeping rates high. At the European Central Bank, or the ECB event in Portugal, Powell said the Fed paused rate changes to assess the impacts of the tariffs on inflation, noting that inflation forecasts had risen significantly due to them. He agreed the Fed would likely have to cut rates further if not for the tariffs. Meanwhile, last week's Middle East truce boosted risk assets and seeing the euro-dollar rally. Still, tension still remains as the market looks towards July the 9th, which is the US tariff pause deadline approaches. While the EU continues to trade talks, including with the UK, the market is still a little bit uncertain in what the outcome is going to be. So with the technicals looking at somewhat extremely overbought, the target around 118.15.45 I feel has been reached, and therefore we should be careful, at least, or on our guard, that a profit taking may come into play in this 11-day rally, and if so, could see a pullback towards 117.40.55 or with a base holding around 116. The trend is still strong and the MACD still supports the RSI, so let's see how we go into today. Overnight, the dollar yen reached its target around 142 but saw renewed demand, pushing it back to 143. And then we now see an inside trading day from the previous range today. Nevertheless, the technicals are weak and the ADX is still trending to a bear case. So therefore, I'm not abandoning my view. That is down towards the region of 142. And keep an eye on this level beneath is 140. A very crucial level, because if we look at the broader aspect, the market may actually eventually tumble into the 130 area. Turning to sterling, the market is still very much on track as it hits a 45-month high and now looks further to the gains to a 138.5 to 139. We are a little bit overbought and a little bit of divergence there, but I feel there may be just one more step up before profit taking comes back into play. And do be aware, due to the shortened US market this week with a close on Friday due to Independence Day, we may find a little bit more whipsaw price action into this coming week. Finishing with commodities, well, since the rebound of the level of 2,270.80 area, spot gold is still remaining somewhat firm as it heads higher and now looks towards 3,380 as a potential target. I like the way this market is shaping up. I would like to see the ADX support the bull run, but still there's a couple of more days to come into play here, and nevertheless any pullback is likely to be weak. Oil, well, the market is still somewhat consolidating into its 6th consecutive day and still waiting for a direction. I did point out, though, that the potential breakout could be to the top side very soon, given how this pattern is forming. And as long as we maintain above the area of $63 a barrel or around 62.80.90, then the upside could possibly eventuate back towards $68 a barrel. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoyed a great start to the day.